Good afternoon, tackle traders, and hello, YouTube. This is Frank coming to you with the market recap for Monday, September 24th. Quite a bit of selling in the overall market today, but another pretty good day over in healthcare and a strong day in energy as well. Tech started early selling, but really actually rallied. So we had a few areas where buyers were willing to step in, but quite a bit of selling. If you look at the top gainers for the S&P 500, this is just the first page that you see here. You'll see medical appliances, biotech, and energy stocks. Pretty much exclusively, those were the gainers on the day today. So those areas were pretty strong, but there was definitely some selling and some heavy selling in certain areas here today. Taking a look at the S&P 500 first, kind of pulled back into that old breakout point where it kind of started to do a little bit of a doji. I like to see that. You guys know me, I like when it pulls back to breakout points, and that is where it holds. Doesn't always have to do that in these upward trends, but I do prefer it. Still above all the moving averages. I also have my short-term averages, my 9 exponential and my 20 simple moving average here. Kind of see where some of these pullbacks that might turn around as we move forward. But we're in pretty good shape on the S&P still today, despite the selling. NASDAQ actually pulled all the way back into its 50 early today before rallying very strong. It had a nice little rally throughout the rest of the day. The trend holds, the support holds, 50-day moving average holds. We still have this little overhead that just for whatever reason has just been causing tech trouble as of late. So we'll definitely want to keep an eye on that. But at least for now, we're still in the same technical spot. And it was definitely nice to see buyers look at that. You look at tech and say, wow, we're down at 50, let's jump in. And they did it with conviction, at least for today. Our Dow Jones did start to pull back after really last week's fantastic week from a bullish point of view. No surprise, some profit taking was going on. We'll just watch for the pullback. Obviously, we haven't seen any turnaround signal today. You can, of course, do what you want, but we're strong. We just came off of an all-time high. Things are going pretty good overall. A pullback is a very natural and healthy part of the process, right? So that's until I have any reason to believe otherwise, that's all I'm going to be looking for on the Dow Jones. I'm perfectly fine with some things pulling back. Looking at the Russell, it continues to struggle. And for the first time today, it actually pierced that 1700 that's been holding it up for the last several weeks. Was able to rally, went low enough to maybe get a few bulls out through stop losses. Did kind of rally back up close on the right side of that 1700. So we're really in the same spot. But for the first time, we've actually seen that give out, albeit very, very briefly. That's really the story on the Russell. I think most traders would agree with that. You want to keep holding that. If that fails, that's going to be a bearish signal. How bearish we're individually going to be on it would be up to us, but that would be a bearish signal. I think most traders would agree. But hey, it did hold again today, but that was the first time that it actually wasn't able to hold all day long. Moving into our sectors, we saw some pretty good downward movement, especially in some of our hot sectors from last week. Here on the material sector, continued Friday selling into today. We're now working into these moving averages, which is often kind of a bullish zone. We need, at least for my rules, I can never buy on a candle like this. Now, don't get me wrong, I kind of want to, but that's why we have rules. Right? I need to see some turnaround happen before I can even think that it's done. Right? For all I know, it's just going to keep dropping. So we need that turnaround candle. We're going to see that as a common theme here today as we look at things in the market. But this general area is where I'm going to be looking for it on the material sector. Been very strong. Just really got caught up in some selling today, like a lot of things in the market did, at least in my opinion. But right now, no matter what my opinion is, we're in the selling phase of that. I'm watching for a potential turnaround point, but until I get that, we are not there, right? On the other side, our energy had our strongest day in the market, gapping above that breakout point. Kind of a cheater, but hey, that works, right? Gapped above that resistance that had been struggling with for much of last week and closed pretty strong. Came off its highs a little bit, but did break through that. Of course, in this type of pattern, I'm going to be watching for that breakout point to act as a support level. But really, we can kind of, just looking at the chart, there is some room for a couple of dollars, in my opinion, for this to work its way up. So I do like where things are overall in the energy sector right now. That break is always important to me. But at least for today, we were able to pop right through there and held pretty strong, coming off the highs a little bit, but nothing too dramatic. And as you saw, when we were looking at the top performers of the S&P 500 today, about half of them were those energy stocks, right? Moving into financials, very similar to our materials. Pullback really got going today, worked back in towards these shorter term averages. Let's just kind of watch. Again, for me, I'm just watching, let these sellers have their fun. Let's see some sort of turnaround candle so I can start potentially at least prepping some bullish retracement candidates. We have been pretty strong overall, the last 2 trading days notwithstanding, right? So very similar there. Very similar situation too over in the industrials. Pulled back here into those averages today. We have a ways to go before the little mini breakout point that it put in, I guess a week and a half ago now. So that can be an area. I'm not necessarily expecting it to get all that, go all the way down to that spot, but that certainly is an area where we can be watching for. But again, I'm going to kind of be watching between these moving averages for that to happen. I'm just going to let the sellers have their fun until we get some turnaround confirmation there. Over in technology, of course, just like the tech ETF that we looked at, dipped early, caught its footing, started to move back up. We're still dealing with those little tops that usually that doesn't bother me as much as it's been bothering me, but tech's just kind of been choppy and very non-committal, I guess. And so I'd like to see it break that. I really think that would be a nice bullish signal if we're able to get that. And until we do, I think people are just going to be a little hesitant. They're just really quick to take profits these days on tech. And they're not willing to give it the benefit of the doubt that it's going to break through that resistance level, at least not right now. Our staples sold off pretty strong today as well. Really just kind of gapped down on the open and really just kind of sold all day long. I'll be kind of keeping an eye on that 50-period moving average as a potential area to kind of stop this particular slide. But again, we are overall on a strong trend, but it's kind of seemed like it's been stagnating a little bit. And maybe that's just a short-term thing. I'm certainly not bearish on the staples sector right now. This chart's still overall very bullish, but it just kind of feels to me like it's doesn't really want to do all that much more in the shortest of terms. But I'll monitor that 50-period moving average because that would be a pretty decent little pullback if we were to work into there and get some signals for maybe a little bit of a turnaround. As we look at some of our weaker, they weren't necessarily the biggest movers today, but our weakest technically speaking charts are our utilities and our real estate sector. Of course, they both broke down last week, broke and closed below their support levels of the breakout points that they had been using, as well as their 50-day moving average. Saw some more downward movement off of that over on the utility sector. As long as we're in this type of pattern, I have to say I am a bearish mindset when it comes to the utility sector. Failed at resistance, failed at support below its 50-period moving average. Maybe that doesn't mean I'm going to jump out and go bearish on everything, right now or yesterday or tomorrow. But technically speaking, that is a bearish signal. And it's really hard for me to get excited from a bullish point of view over there. Healthcare, another strong performer, not a huge candle, but we did, see some pretty nice price movement to the upside in a lot of those healthcare, biotech, and type of stocks. Really nothing to say that we haven't been saying for months now, right? Good times over in the healthcare sector. It seems almost bulletproof. No matter what the market's doing, it doesn't have these huge, exciting candles like we've seen, in industrials, materials, and financials lately. But it doesn't have the big downwinds either, right? It just kind of keeps plugging right along, just slow and steady. But every day it seems like it's, either about to or testing a new high. Continues to be my favorite sector personally, as it has been for quite some time. Over in the discretionary, I think we have to say we're much like our real estate and our utilities where we were last week. I think you have to look at the discretionary sector the same way, where we are now going into a sideways, undecided area. It doesn't seem to want to break out. Obviously, support continues to hold. It's, to me, whenever it happens, unless it's a neutral type of strategy, which is fine, I'm going to be looking at it directionally to break one way or the other before I get too excited one way or the other. But hey, it could be as early as a couple of days from now, right, where we're having a conversation where it's threatening to break support or resistance. So, but we've gone kind of into that range-bound situation over in our discretionary sector. And our real estate, again, much like our utilities, had closed below on Friday, closed below its breakout or its support level, its 50-day moving average, and really tanked today. As you can see, was a very, very weak sector. I mean, it went down, and it went down fast and pretty furious. Not really any little, even many intraday rallies, honestly, today on the real estate sector. It remains to be a very bearish chart overall, with the failure of resistance, the failure of support, even the previous swing. I don't really think that this is a good spot right now. Personally, those are some pretty strong sell signals. So from a bullish point of view, real estate's got a lot to do to get me back on board. From a bearish point of view, things breaking down in the sector, potential retracements, maybe not tomorrow necessarily, but potential bearish retracements could be something I will spend a little bit of time looking for, because we're definitely seeing some weakness over there. And our first look at our communication services ETF, as we start getting used to that. If this was a stock, I would never follow this chart. It doesn't have the history. I would never follow it if this was a stock, but it is an ETF and it's tracking this sector. So I'm going to follow it. I'm just not going to love it for a little while until we get a little bit more history to develop on our chart. So kind of what I was kind of thinking with how I'm going to approach it technically in the short term is just kind of identify the major points of support and resistance on it. You can kind of see here, there's a level of support. Obviously down here I didn't draw a line, but down here is a level of support. We have a resistance point that formed last week and a resistance point up here. So these are going to be the price areas that I'm watching as history starts to develop. Created a little situation where we've made higher lows and higher highs. So that will be interesting to watch over the next few days. I hate things that don't have history, but it is what it is. And I do believe in following these sector ETFs because they were very helpful in understanding how the sectors are performing, what areas I want to be looking. Maybe I'm not trading the ETF outright, but it can really help me. I want to look at energy stocks from a bullish point of view. I want to look at healthcare stocks from a bullish point of view. I want to look at real estate stocks from a bearish point of view. It can really help guide me to what I want to do and at a given time in the market. So I do think it's really important to follow these things. And it will be fun. Before you know it, enough time will be passed and we'll have lots of history, right? That's how time works. So that's where we find ourselves in our sectors here today. A lot of selling, a lot of things sold, but really, for the most part, didn't do anything wrong. We have, of course, the breakdown that happened last week in utilities, in real estate, but our other sectors, there was some pretty heavy selling in some of them, but it didn't do anything as far as breaking support or anything along those lines. So if that's not happening, I'll be looking at it as an opportunity, probably not for tomorrow, but for moving into the later part of the week for some pullback opportunities. I hope that's what we get. But of course, we'll see. Taking a look at our metals, gold continues to do exactly what gold continues to do, continues to trade within this trading range. Really, until it breaks, I'm not going to be an exciting person to talk to about gold because I'm going to say the same thing. If it breaks 1220, that's a bullish signal. I think you can buy. If it breaks down, I think you can sell. Right now, I think it's, unless you're doing stuff neutrally, I think it is let's just watch it. Let's see how long it can do nothing. Do this for as long as you want, because sooner or later it's coming out, right? One way or the other. And we'll be there when that happens. Over on silver, we continue to fight towards that top of that trading range. So really very similar to where we were last week, continue to fight at the very top of that range, but still very sideways over in the silver market as well. Pretty flat day for the dollar, kind of came off of our lows, kind of closing up a little bit on the day, but technically speaking, we're in the same spot that we've been these last several days where we're making these lower highs. We just recently broke that support level. We haven't even tested that old support as new resistance. We're working up into that falling 9 average. Still a bearish chart, in my opinion, in the shortest of terms. In the longer or midterm, is still pretty sideways. So I really don't have a strong opinion. Even though I could see a shorting opportunity presenting itself, I don't think that would be something I would be interested in because we're so range bound in the longer term. But that's where we find ourselves in the dollar. As we have our Fed meeting here in a few days, maybe that will prompt some movement one way or the other. Over in natural gas, another strong day as we actually broke and closed above 3 for the first time in quite some time. I think the best way to look at natural gas right now is to take a closer or go into a weekly chart and to see where exactly we are. We haven't broke out just yet, but we did break that. We know that this is an area. We know round numbers tend to be psychologically sound, and $3 has been psychological, in my opinion, for natural gas recently. We did close that. We haven't taken out the actual high, but this looks like a potential bullish breakout situation, right? When you just look at the chart, forget about anything else. We haven't, I want to see it break through that to, feel really good about it. But you can't argue with the strength of natural gas. And traders just have been willing to, they've been so tentative to buy in, close to 3, but they didn't have that feeling today. That's for sure. It got running. And I think you could call it a break. I don't think I would call it one just yet, but I'll be the first to admit I'm kind of a wimp when it comes to that type of stuff. But still showing tremendous strength over in the natural gas market. And of course, lastly, our crude, another strong day after pulling back on Friday, testing that breakout point, holding that breakout point, rallied up, of course, off of it, and pretty strong movement here today. I still think we're very similar to where we were last week. We're at a higher price, but we have confirmed, tested that breakout point. Bulls are willing to come in off that price point. We now know that they've done it at least once before, right? So I do continue to think it's got some bullish upside. We don't really have a lot of resistance until we work towards 74, towards that $74 area. And so that's always like when I see that. It might go down tomorrow, but there's no real great reason for it to. There's not a ton of overhead, especially if we can kind of break through this little 73 area, kind of a little mini level of resistance back here. I need to kind of sell off a little bit off of those highs. But still, to me, overall, a pretty bullish chart. It's been messy. I've not loved crude because it's been messy, at least to my eyes. But we're definitely seeing some bullish signals, higher highs, higher lows, breaking resistance, holding breakout points. Those are definitely bullish signals, regardless of how I want to approach it, if at all. So that, ladies and gentlemen, is where we find ourselves. Pretty mixed day in the market. For the most part, a lot of things sold off. A few things, crude, strong day. Tech, pretty decent day. Obviously, there are certainly some things out there in the energy sector, in the healthcare sector that had pretty strong days. So a little bit of a mixed day on a pullback to start our week off. So if, again, it's up to us individually, but if you believe that this is a pullback, this is a great time to start getting ready. Great, let's let these things pull back. Who would I be interested in? Let's start following them for that potential opportunity. Maybe it'll happen, maybe it won't, but we can definitely be ready for it, right? And so if you are bearish, or, oh man, this is the end of the market, we'll go find things that are showing weakness. Find things that are breaking support or in weak sectors or in weaker sectors, and play it. And that's one way that you can play it if you're on that side of the equation. So prep days are just as important, although maybe not as exciting as days where you're in things, right? So a lot of times trading is being prepared for stuff when it does happen. So with that, ladies and gentlemen, as always, it is certainly my pleasure, and I do appreciate everybody's time. Be sure to subscribe to the Tactical Trading YouTube channel and hit that notification bell so you can be alerted to any new videos that we're doing over here. And of course, be sure to follow us over at Tactical Trading on Twitter, kind of keep up with some of the things that we're doing, some of the things that we're watching on a day-to-day basis. If you did enjoy the market recap, it is always very helpful and appreciated if you do give it a thumbs up to let us know that we're on the right track. With that, get out of here. Happy trading, and I will see you in the next one.